Hello and welcome everybody to today's webinar by the papers on stablecoins and payments. My name is Jan Koster. I'm a consultant at InnoPay, which is a business of Oliver Wyman. And I'm also part of our Oliver Wyman Global Digital Assets practice, in which we help our clients bridge the gap between traditional finance and digital assets. Before I kick off and introduce our lovely panelists, some housekeeping. So the discussion today will last 45 minutes, and we close off then with some 10-15 minutes Q&A at the end. On the right side of your screen, you see this little Q&A widget, so you can submit any questions you have during the session. Some we will answer during the session, but also some we will keep for the Q&A at the end. And we also have some subtitles available, English, German, whatever. It's also at the top right, I think. There's this little CC sign. So you can toggle that on if you want to. That was housekeeping. So for today's webinar, we have some, like I said, excellent speakers, well positioned to talk about this topic. And I can, at least on my screen, the left one is Goldie, so maybe you can start introducing yourself.
Yeah, happy to. And hello, everyone, and thank you for making the time, whether you're in US, Europe, or APAC. Hopefully, you're joining, even though it's 1 a.m. here, because this is obviously a super important topic. I'm Goldie. I lead the payments and network divisions at Fireblocks. Fireblocks is probably the largest infrastructure provider in the space. Been around for more than 7-8 years, serving about 2,000 different financial institutions, from large payment companies like Visa and WellPay and Checkout and Bridge to SMBs and other types of blockchain related companies. Obviously, payments is our top of mind. So happy to be here with these amazing group of speakers. To you, Julia.
Thanks, Goldie. Hi, everyone. I'm Julia. I lead corporate development and strategy at BVNK. We are a leading stablecoin infrastructure provider, so we enable businesses and their end customers to seamlessly integrate stablecoin payments into their experience. Also servicing customers like Visa, WorldPay, Deal, Rapid, a lot of the big global payment processors, and really excited to talk about stablecoins today, one of my favorite topics.
Hey, I'm Kene Ezeji-Okoye. I work with Ubyx, who are building a global clearing and settlement network for stablecoins to solve some of the challenges that I'm sure we'll talk about today that still exist. Ubyx was founded by Tony McLaughlin, who might be familiar to some of the people watching, as the mind behind the regulated liability network that was working on private blockchains and tokenized deposits. But I think the Overton window has significantly shifted, and the focus is now firmly on stablecoins, and we all see where they're going. So we want to help make them a globally accepted, ubiquitous form of digital money.
Okay. Henry de Jong is my name. I'm one of Quantos co-founders and responsible for business development. Quantos has been building Nexus, a stablecoin lifecycle management platform, over the past 8 years. Until today, we've processed more than 100 million transactions and a 5 billion transaction volume. We have a daughter company, Quantos Payments, that has an e-money license with the Dutch Central Bank, and currently issues 3 electronic money tokens that are designed to be compliant with the markets in crypto assets regulation that has been in force in Europe since June last year.
Perfect. Thanks, guys. So moving on to the agenda for today. So we will start with a brief introduction on what stablecoins actually are, how they compare to traditional currencies and other digital assets. Then we move on to basically use cases, and afterwards to the challenges in adopting stablecoins. And we close off with a forward-looking view, right? So what are the emerging trends we see in this industry? And again, like any additional questions, topics, whatever, shoot them in the Q&A, and we will cover them. So starting with the introduction to stablecoins, so maybe some folks in the audience not too sure, maybe still are not aware of what a stablecoin actually is, or there might be some misconceptions. So at least in my words, and like everybody feel free to pitch in, stablecoin is basically a digital currency on a blockchain network, which is pegged to any reference value, right? And mostly that is a fiat currency, and then again, mostly that is the US dollar. So that it pegs back to a fiat currency, and that way it maintains a stable value, right? Versus a more volatile traditional currency, cryptocurrency, sorry, for it to be used as a medium of exchange, or simply put, as a payment method, right? Yeah. Any additions, guys?
Well, I will say from my from my point of view is that the right way to look at all of this really, and I know, by the way, Tony Kene, you mentioned him, obviously a very interesting figure in our space, right? Very knowledgeable and very opinionated. I think we look at it the same, which is this is an infrastructure upgrade that's happening in the world right now, which is we have these, we have rails, global rails like Swift. We have local rails like Zelle, or different types of faster payment schemes, etc. What really stablecoins and this whole thing called the blockchain is here to offer is an upgrade of some of those rails. It doesn't, and we'll talk about this in misconception, but it doesn't mean that the entire financial infrastructure needs to be replaced. It means that we've created a way, which is called a stablecoin, to put value on a digital piece of software, really, that we can send between one another. And that has real value because that value is actually stored in a one-to-one form of whether that's a dollar stablecoin, and you have dollars in a bank account somewhere held in reserve, like with USDC by Circle, that that is held with BlackRock, for example, and Bank of New York Mellon, or other forms of European type of stablecoins, right? I'm sure Henry from Quantos can talk more about those that are held in banks. But as the real dollar/euro or whatever currency is stored in a bank, we now have a digital representation of that doesn't just exist locally within a bank framework or just within a country local payment system, but can exist globally. And that really changes the behavior of payment companies, of banks, and what can they do and what can't they do with this new form of technology, really. But let me pause here. I know, Julia, you probably also have your own take on this that we talked about before.
Yeah, I mean, stablecoins, definitely see them as a future upgrade. I think there's still some challenges to be had to date, but maybe to talk quickly to some of the advantages of stablecoins, I really see them falling into like three key categories. So the first one being speed, the second being cost, and accessibility being the third. And when it comes to speed, if you look at traditional cross-border payments, particularly payments into emerging markets where there's limited connectivity, that can take 2 to 5 days, maybe even up to a week. And stable coins by nature are instant. It's literally a ledger movement on a blockchain. Your money is with you in minutes. So there's a significant speed upgrade. And they're also 24/7. So unlike like traditional markets, which are closed on weekends, stable coins in the blockchain operate nonstop. So that's the speed advantage. There's also the cost advantage. So in many cases, particularly when you're sending money into emerging markets, there's a lot of different intermediaries, so different correspondent banks that you need to go through. Each one is charging their own different fees, and all of that adds up. And the beauty of stablecoins is that they actually remove a lot of these traditional intermediaries. So in theory, a lot of these payments can be significantly faster and can be in the basis points rather than 3 to up to 7% for some of these traditional cross-border payments. And the third advantage I see, which Goldie briefly touched upon, is that of accessibility, whereby anyone anywhere in the world can open a crypto account and get access to stablecoins. Whereas if you are, let's say, in Mexico and you want to open a US dollar account with JP Morgan, it's a lot more difficult. With stablecoins, you don't have that challenge. You can essentially get US dollar exposure without necessarily having a dollar bank account, and it's super easy to get set up. So that's really where I see like the three main advantages of stablecoins, but I'm sure the rest of the panel has some additional thoughts on that as well.
Just to take it back to us for a second, I feel like people get slightly confused because we tend in the industry to talk a lot about technical jargon, etc. But the actual instrument that a stablecoin represents is pretty familiar to something that we saw in traditional finance emerging like 100 years ago, the traveler's check. You know, it's a bearer instrument. It's US dollar denominated. It's issued by a non-bank issuer. It's cross borders, fully collateralized, etc. The main difference is that a stablecoin is bits and bytes rather than a piece of paper, and it's built on these global ledgers that give it all the advantages that you talked about. So it's not such an alien concept as people might find it to be at first.
Yeah, I totally agree. And that's also what Goldie said at the start, right? You should look at it from an infrastructure perspective. It's the digital age of something we already did, right? Julia, you also talked about like the benefits, one also being it being cheap, and I think that is one of the also big misconceptions, right? I mean, as you post about it every day, like the one saying it's basically free and the other saying no, it's even more expensive. Could you maybe elaborate a bit on that?
Yeah, I'm happy to take this one, and then feel free to chime in for the rest of the audience. I think the answer to that question is very much, it depends. If you're sending money from the UK to the US, are stablecoins going to be the best and cheapest option? In most likely all cases, the answer is no. Whereas if you're sending funds from, let's say, Nigeria to Mexico, where you don't have that much traditional banking connectivity and where you typically face much higher fees, then stablecoins can be a really great and likely cheaper alternative than traditional rails. So my answer to that question would be, it really, really depends on the corridors. I would say that there's also a little bit of inefficiency in some markets where you might not have enough stablecoin liquidity. So moving back into fiat can be in some places expensive, which actually adds costs into that transaction. But that will get cheaper and better over time with more liquidity coming into the market. So I do think like there are some corridors where it's a clear win. In others, I do think we will get there as stablecoin infrastructure and liquidity gets better.
Yeah, I think the most important reason that stablecoins are cheaper are that the infrastructure is extremely cheap. If you have some blockchains where the transaction fee is a thousandth of a cent, and we don't have any middlemen in the stablecoin payment infrastructure. We don't have a credit card company. We don't have a payment service processor, a bank, or an acquirer. So it's you're cutting costs. Yeah. So it's and that is what we see, especially in the cross-border payments, in the remittances, where you have very inefficient payment rails. That stablecoin payments are not only 1,000 times faster, but they are also 1,000 times cheaper.
I have to intervene a bit, because I do agree with Julia and Henry, obviously, but I feel like, look, for us, the people in this panel, and again, I'm sure, I think it's not the same for the people in the audience. When I go to LinkedIn, for example, all I see right now is stablecoin payments. It's all about stablecoin payments suddenly, right? At least in the world of digital assets. And obviously stablecoins right now, we have to admit this locally here as panelists, right? They are overhyped, okay? The reason they are overhyped is that so many companies try to portray them as the solution and cure for everything. If you can't send money today to a bank account in, I don't know, in Congo, then stablecoins are not going to save you. Okay. And that's a fact, because like Julia said, it works where in places where there's great liquidity. It works in places where maybe the path itself ends with a stablecoin. Maybe in some location you don't need to go back to fiat, but we do need to understand some of the misconceptions, right? And I think everyone here is right. Like Henry and Julia, they said it outright that it depends. And let's talk about this for a second. I'm a true believer that the real value of stablecoins is in the velocity, right? The velocity of money. I'll give you a very easy example for that. When we have the importer-exporter use case, where we see a lot of B2B companies now adopting stablecoins, B2B payment companies now adopting stablecoins for that use case, where there's an exporter somewhere, maybe in Hong Kong or Singapore, and they're sending a container to an importer in Brazil, and that importer needs to pay out. And they need to wait a few days, SWIFT, etc. They pay the charges of having the container in the port, etc. Now they're moving to stable coins. They're sending the money faster. Is it cheaper to send a dollar-based stable coin from Brazilian real, convert that to a dollar stable coin, send that to Singapore, convert that to Sing dollar, to USG, and then send that to a bank account? Not necessarily. But just the fact that you saved on 2 days is worth money. And that means that payments company can use more of its cash flow, obviously, to do more round trips, right? And serve more clients more efficiently. So I think the first misconception, and Julia and Henry also said that, is cost is not the number one for driver for everything around stablecoins. I truly believe it's the velocity of money more than anything else. And by the way, just as a point, I guess an anecdote, we've recently surveyed 300 payment companies and banks, right? And we tried to really ask them, what is the number one reason you're looking at stablecoins? And it wasn't cost saving, by the way. It was revenue generation. And when we double clicked on that in the survey, it was because they have audience in places where that audience wants to receive a stable coin and they can't support that right now. So that's like an additional flow for them, and which they could not serve. And it's also revenue in terms of, like, again, they have merchant demand, for example, not just end users demand, merchant demand that wants to do this. And I think, Julia, we had something really spectacular happening today where WorldPay, as we both said this, WorldPay has now opened their engine to do payouts, right? And BVNK and Fireblocks are helping them do that. And that's exactly why. It's revenue. So its first misconception, I think, is cost above all. That's not true. I think it's velocity of money. Second misconception, again, is like, why are people doing this? Again, I think it's mostly because of revenue. And I think that the last misconception is probably, what banks think about this. And this is really open for debate. I'd love to hear, Henry and Kene as well.
I would like to address one thing we so far did not address, and that's the programmability. You just mentioned this example of the container entering the port in Singapore. So as soon as you hand over the container or the bill of lading, you would like to have the payment connected to the handover of the goods. You would like to see the execution of the payment. Well, in today's financial industry and in the logistics industry, this is simply not possible or extremely hard. If you could execute the payment at the moment the bill of lading is handed over from the shipping company to the transport company, that would really save costs for supply chain. So it's the programmability that's also a very important aspect of why stable coins are so interesting for, I would say, nearly every industry.
Maybe to just quickly add on to Goldie's point around revenue, you talked about the fact that banks, businesses like WorldPay, who we both work with, they want to do this because of revenue. But I think what we didn't touch upon is what is driving that revenue. Like, why do people want to pay WorldPay to get access to stable coins? And I think that comes back to the point I mentioned in the beginning around accessibility, and in particular, access to the US dollar. Because if you think about who is using stable coins today, it's actually often coming from individuals and sometimes businesses in emerging markets that are faced with highly volatile currencies. It could be in Argentina, it could be in like parts of Latin America where we see this a lot. And they're actively looking for exposure to US dollar versus their local volatile currency. So we, for example, work with Deal, the global employer of record. They're paying thousands of contractors every month in stablecoin, because those contractors would rather get paid in a USD pegged stablecoin than in Argentinian pesos. And that's actually exactly what we're doing with WorldPay. So we're going to be enabling their underlying merchants, be it like an Airbnb or Etsy or whoever they're processing payments for, to provide stablecoin payouts to their underlying users, whether it's like creators, contractors, often in these emerging markets. So I think that's very important to mention, because it is this drive for like US dollar exposure, which is fueling a lot of this growth.
And then in these countries, these recipients, right? Do they keep the USDC or do they have to convert it back to fiat?
We see a bit of both. So some of them see it as a store of value. So they're saying, I would rather receive my salary in USDC because at least it's not going to be, it's not inflationary. Like, I'm going to be able to actually save better with this. But then obviously you need to off ramp at some point, and if you want to spend it, they're typically like using cards, which allow them to kind of like convert immediately into the local currency.
Yeah, the reason why I'm asking is also because you mentioned liquidity being one of the challenges at the start, and I think especially in these countries that is a problem, right? I mean, I think Goldie already mentioned like Congo or whatever. So, but that really depends whether you do want to off ramp it, right? And I think these countries, I do see a future where why would you even want to off ramp it?
I think, look, in the future, I wish we could all live in the future, because in the future, I don't think we would need to off ramp it, because I think in the future, companies like, Ubyx, what Kene's doing, would allow banks to feel comfortable with this type of asset, right? And like Julia said today, I was in Argentina and Brazil about a month ago for about 2 weeks, just meeting with clients, and you really see people who, and again, I know who've been to Argentina recently, you actually get a 15 to 20% discount if you pay with USDT, okay? Which is super interesting. And again, there are people who are holding dollars in the, because they want to protect themselves, like we said, from, volatile economies today. And there are also people who are just accepting that type of payment because they cannot accept a payment from that country in any other way, right? Again, if we're tapping into the use cases, I think one of the use cases that was talked a lot over the last year, for example, that was public, which is Starlink, right? Starlink, the internet provider by Elon Musk, they obviously serve different regions of the world where a lot of those regions are not dollar-denominated regions, and people over there cannot easily send a payment to Starlink, for example. So Starlink collects their money right now using Bridge, Stripe today, with Fireblocks in the background, obviously, a shameless plug. So they're collecting that payment with stablecoins, right? So again, some people just hold that because they know they will pay for a different service with that as well, right? So it's not always about where do I off ramp it today. A lot of the times is, you know what, I'm just going to hold this in my, there's a lot of different wallets globally, like Dollar App, or Chipper Cash in Africa, or if you think about even Nubank, Revolut, Robinhood, they've all added this support for stable coins, not just for trading purposes, but because their users are now actually using them for the faster payment route, right?
True.
Sorry, can I go back to the banking point of view? Because I think this is really interesting, probably for a lot of people who are here. I'd love to hear you, Kenny. We didn't talk about this before, but I know that banks are anywhere between excited for this new form of money to terrified, maybe that maybe this new form of money doesn't, how can they really rely on this? And then obviously you guys are looking at this differently, and maybe you can expand on what you guys are seeing with the banks.
Definitely a lot of conversations. I think everyone understands now that they need a stablecoin strategy, whether they want one or not. And that goes for enterprise, corporate, governments, nation states, financial institutions, etc. But some of the things that you've been talking about, Goldie and Julia and Henry, if we're not off-ramping, we're kind of creating a new closed-loop system. We've got some closed-loop payment systems out there in the world. And if we don't have connectivity with the traditional system, which isn't going to disappear overnight, we're really fragmenting everything. And a lot of the use cases that we've talked about so far are kind of retail or SMB. But for your larger enterprises and corporates, you can't hold stablecoins today on your balance sheet, as cash equivalents. You have to hold them as a financial instrument, which is punitive. And so stablecoins kind of become this hot potato. In the presence of a clearing system where you mitigate a lot of the counterparty risk, you don't have to have all these kind of bilateral relationships between issuers and on and off ramp points. Stablecoins have a path to become cash equivalent, and somewhat paradoxically, much like I'm more comfortable holding all of my money in a bank account because I know I can go take cash out of an ATM. Once you have the ability to off ramp, you actually need to do that less often, or you're more comfortable keeping all of your money in stablecoins. So I think, as you said, Goldie, I wish we could see the future. I think I see a vision with many, many stablecoin issuers, just like anyone today can issue a credit card or issue a check. We'll see a lot of different stablecoins. The market structure will look quite different, but we need a glue or some connectivity to connect old and new. And despite the fact that we're building with the technology that has a lot of advantages, some of the old market structures develop and still make sense in the future.
Regarding the connectivity, I'm completely with you. We are in the blockchain space and in the crypto world. You see a lot of DeFi's popping up. You see a lot of exchanges offering pairs between different stable coins. So we're getting this ramp on, ramp off between different stable coins, but not with traditional banks. It's happening in the Web3 sphere.
I don't know, Henry. I mean, yes, you're right. It's definitely happening more in the Web3 sphere, but I feel like this year, especially since obviously the administration change in the US and everything that's happening, and now with the stablecoin bill, right, the Genius Act, I felt like we've never had more conversations with banks than we did in the first half of this year. Obviously, it doesn't mean that tomorrow morning all the banks, again, like you're saying, right, it doesn't mean that tomorrow morning all banks will support stablecoins. Definitely not. Banks takes their time, and probably for a good reason. They still handle most of our money. ACH, I think, moves quarterly something like $270 trillion versus Visa that moves about something like 6 or 7, and stablecoins that move around 8. Right, so the banks obviously is important. But we are having a lot of different conversations with these banks, because I think what they're doing right now, and Kenny, you said that they all understand they need a stablecoin strategy. Part of those banks, by the way, are saying that their strategy is actually not supporting stablecoins, because maybe stablecoins are not what they want to see in the future. By the way, and again, I'm not saying this is what will happen, but if you look at JP Morgan, they have Kinexys, right? Their own internal system for tokenized deposits, right? Why is that? Why aren't they supporting USDC and USDT? They could have if they wanted to. I think they're doing that because they they think, I think, that stablecoins need to be one for one, right? And that prevents banks from rehypothecating those funds, really. And that's not exactly the core business model for banks. So I think we're going to see a lot of interesting movement where some banks will support this because it actually will help them to create more revenue, and it will help them create more offerings to their clients. And we already see this, by the way. You see DBS in Singapore offering stable coins for business accounts. You see BTG Pactual, one of the largest banks in Brazil, already offering stable coin balances for business accounts, right? But some banks will maybe try to create a tokenized deposit point of view. And what I really hope that will happen, and Kenny, I don't know if you guys are the engine behind this, or maybe Henry from Quantos, but I really want to see interoperability between all of this. I'm really afraid that it would take a few years before we get all these banks deciding if they want a stable coin, they want a tokenized deposit. How can those two actually interact? Maybe tokenized deposits are for within a jurisdiction where certain regulations are easier, and stable coins are for cross-border payments. I don't know. We're really trying to push for that interoperability. Whoever's tokenizing a stablecoin on Fireblocks, we're trying to push for that. But it's obviously it's a very much an uphill battle at this point in time.
I think what we think of as stablecoins today might not be what we think of them as tomorrow, and the lines between tokenized deposits and stablecoins and CBDC may start to blur. To go back to the check example, sorry if I'm dating myself a little bit, but you can write a check against balance sheet of a bank. You can write a check against a tokenized or against a money market fund. Amex used to let you write a check against a credit line. All of these things were cleared in the same system and gave that interoperability. And so I really think that a clearing system glue that allows these different systems and different types of instruments to all interact in the way that you say, Goldie. Maybe something is used internally. Maybe a big e-commerce platform has their own internal stablecoin that they use for supply chain or cash management of their group. Use a global stablecoin for cross-border payments. That lands at your bank and turns into a tokenized deposit. It's game on for the future, but as you said, it's going to be an evolving space for the next few years, and I think it will be very interesting to watch how it all plays out.
Kenny, I think we've got a few questions already also on this interconnectivity. I think it really resonates with people. So that's what you guys try to solve, right? But then how does that work, especially if you throw tokenized deposits, stablecoins, everything in the mix?
Again, I keep going back to this, and it's not a perfect one-to-one analogy, but it really is like a check clearing system or an RTGS system. Is that today, if you're in the 80s and you have a coffee shop and you finish the day with 8 different checks, some are from your big banks, your JP Morgans, your Banks of America, and others would be from the 5th Bank of Albuquerque or the 4th Credit Union of Sioux Falls, South Dakota. You don't care who the issuer is because you know that you can take those checks, give them to your bank will give you money. And your bank doesn't necessarily have a relationship directly with the 4th Bank of Albuquerque, etc. It puts them into this machine that's a money collecting machine, collects the money on your behalf, and then gives it to you. In the presence of such a machine, the instrument that you give to the machine starts to matter less. And so whether it's a tokenized deposit, if you're clearing these out behind the scenes, and, we don't want to go into the mechanics, but you can start to really accept everything at par value, and the issuer or the exact makeup of the backing assets, etc., don't matter any more than they do today, where you have 16,000 different people issuing Visa cards or 4,000 banks issuing checks. It just all becomes homogenized, and we don't have to think about it. I don't think, oh, my Monzo account is a bank, but my PayPal money is e-money. It's just money.
Yeah, so you guys basically take on the counterparty risk and ensure like the singleness of money, right? That's what it is.
We don't take on any counterparty risk. We're a messaging layer and orchestration, and so we help facilitate the movement of money and assets between regulated parties. Works with pre-funded accounts, much like an RTGS system.
Really interesting. Okay, so also in interest of time, I think we talked a lot about benefits, but maybe moving on also to challenges. I saw a few questions popping up also when you talked, Julia, about one of the benefits being worldwide access, and then a few questions popped up like, okay, how does that then tie into more regulatory challenges, especially like AML, CTF, etc. So again, what are challenges, but then specifically that one.
I'd say there's definitely, like, the stablecoins are far from perfect. There's a lot of challenges that are hindering adoption today. Obviously, so I think someone had a question around fraud. I think every time there is a new payment system, like, all the fraudsters will try and take advantage of that. So I do think, like, compliance is a really big challenge for crypto companies, and that's something at BVNK that we strive super hard to do and to be best in class. And ultimately, if you want to service the big banks and the big PSPs, that's what you need to do. But I think that applies to, like, every new payment method, whether it's stable coins, whether it's like open banking, and so on. And arguably, you have a lot more traceability and visibility across blockchain transactions. You can see what's happening, like, several hops away of the transaction because it's all digitally recorded. I would say that the biggest challenge that we've seen historically in this industry has been the lack of regulatory clarity. It's only starting to happen now with the likes of MiCA, which is like a European legislation which is standardized the rules around stablecoins, and now we have the Genius Act in the US, which is doing something similar. It's only with these types of legislations that large institutions are finally gaining enough comfort to be able to actually move into this space. So for me, that feels like really historically the biggest blocker. It stopped large institutions from moving into the space. It's also created a lot of friction for, like, traditional banks that have been unwilling to bank crypto companies. So if you're a crypto company, you're trying to expand into the US, like, trying to get a bank account to launch your own operations is actually very difficult. There's a lot of friction there because of the lack of regulation and the fact that, banks are still hesitant to work with crypto companies. So I think regulation, there's still definitely a perception issue in the space, but these are all kind of teething problems that I think I'm very confident that will get sorted over time.
Yeah, and maybe just an add-on with what Julia said, I think, regulation was really a huge hurdle, right? Like, in the survey we did in 2023, 85% of respondents, that was North America respondents, said that, regulatory uncertainty is a barrier, right? You go today and you look at the answers that we received today, that stat has dropped by 60%, right? Which is incredible. And in Europe, by the way, where we also surveyed, PSPs and banks, right now only 18% of them see regulation as a barrier. And this relates to what was said here, that there was actually a really big move forward, right? With MiCA is great. It finally gives clarity. And by the way, for Fireblocks, we saw, I believe, something like 30 to 40% of the new payment clients that have joined specifically in 24 on the back heel of MiCA being rolled out slowly were companies out of EMEA, right? Which is super interesting. So I think that is becoming less of a challenge, Yelmer, right? You said, let's talk about challenges, right? I think that another challenge is again, we're confusing a lot of the new entrants with what they need to do and how they need to do it. So let me try to explain this. The way I look at the world of people who are coming into this space is that they really need to choose what is their crypto posture, in a way, or digital asset posture, stablecoin posture, whatever you want to say. If you're not allowing to say the word crypto in your organization, it's fine. But basically, there's this whole path from crypto remote, which is, I want to offer, I'm a financial institution, I want to offer stablecoin service. Let's say that's payouts, like Julia said, that the BVNK is doing for Deal, for example, or something else, but I don't want to touch the asset itself. We call that crypto remote at Fireblocks. And then there's a path where you go through being what we call crypto related, which is you hold some accounts in exchanges, but you still don't really hold the actual asset in your own wallet, in your own accounts, and so forth. And then eventually, you probably all of you in the audience you won't have any other choice. You will graduate to being what we call crypto inside, which is literally holding wallets, holding the assets, etc. Right? And I think that people we throw so much data and opinions, and you need to use this for cross-border, this for that. Again, for everyone in the audience, you need to just start your, let's call that your journey, your stablecoin journey. And maybe that's starting with crypto remote, where you take some piece of orchestration layer, right? And you get a liquidity provider and you plug that and you go off into the races, and you allow your compliance to learn more about how this acts, and you allow your treasurer to experience the governance and policies, right? So that's how I'm thinking through some of the challenges, I guess, and the mediation for that.
Yeah, so I agree with you. So there are still the technical challenges that users face. It's stablecoins are not cryptocurrencies, but they use the underlying technology. Yeah, so you still need to manage your keys, your wallets, and as you probably know, every month we read in the press about security breaches, also at big companies, and that makes a lot of users still hesitant from starting using with stablecoins.
And to add to that, I think a lot of what Goldie and Henry said really resonated. I think particularly the fact of this spectrum that you described, Goldie, is starting where you kind of want a full service solution where you don't actually need to touch the crypto yourself, all the way to I'm going to be a bit more adventurous and actually try and run this in-house. And we think that today people or companies are more on the wanting to kind of dip their toe in the water, but maybe outsourcing compliance, maybe not necessarily going too deep in terms of holding having their own wallet. So we built actually BVNK to start catering to those firms, like if you want to get started too quickly. But now we've basically evolved to be able to service companies across their life cycle, as well as these companies that want to build in-house. And I think in the future, you're going to have firms like stablecoins will basically be mainstream. A lot of these big firms that were hesitant to kind of like do everything in-house are going to want to be in the flow funds. They are going to want to capture that value themselves. And I think that's a service like that BVNK can provide as well as Fireblocks. And it's really about being able to cater to these firms across that spectrum and that appetite to engage in crypto or stable coins more specifically.
Interesting. Moving on, also interest of time. Final topic was, forward-looking view. So we wanted to discuss basically what are trends we see now, where do we think this is going? I think we touched upon it already a little bit, right? Also in this last discussion. Just if I could ask you guys, what is, I don't know, your number one or your top three, what is something, the audience should really monitor the coming years, months, whatever?
So I think that one of the great use cases for stablecoins these days is the possibility to invest in tokenized money market funds. So we all discussed the cross-border payments, supply chain, and so on. But if you have a treasurer that has a cash surplus at Friday afternoon at 4:00, and what can he do with the money over the weekend? Yeah. So if this treasurer has the possibility to transfer 1 or 2 million euros into a tokenized money market fund and leave the money in the tokenized money market fund until Monday morning 9 o'clock, we've made some calculations for companies, for SMEs that are looking into investing or having their cash surplus parked into a money market fund. You can tokenize the money market fund, but if you don't have the stable coin, so then you have only digitized half of the process. And the stable coins and the tokenized money market funds on chain enable treasurers to make the money generate yield.
Especially as under BCAR, you can have interest-bearing stablecoins, right? And also in the US.
Yeah, but so normally, if you would invest in a money market fund, it would take you T+2 for the ramp on and T+2 for the ramp off, and you wouldn't have the possibility to invest over the weekend or just for 3 or 4 days in such a fund.
We have this map.
Yeah.
Sorry, we have this map that we published like maybe 2-3 years ago, which is where are we today in the adoption of stablecoins and everything. And we sort of started that chart by saying the first adopters of this tech will be the payment service providers, right? Because every bips matters to them. They're in the business of moving money, literally. And that's why stablecoins, they will go all in on stablecoins. And again, we're powering about 300 of those, right? We processed about 4 trillion last year in flow altogether for our blocks. We're about 15% of the global blockchain movement, and half of that is stablecoins, right? And PSPs were really the first to adopt this. And then what happened next is fintechs, right? So Revolut, Nubank, Robinhood, they also adopt this. Now I think we're at a point where we're seeing banks starting to adopt this. Great. But you asked about the future, Yelmer. I think the future, and again, I don't know, people, I'm in the digital asset space for, I don't know, more, unfortunately, 9-10 years right now, right? I used to have more hair. But I think that banks are the real enabler for all of this. I think banks, as they adopt this now, and hopefully Kene is successful in their mission, and Henry and Julia and all of us, right? But banks will adopt this, and then every business, that's the future. What we need to also think about, that there needs to be certain events that will happen in the future that will unlock more of this advancement in a way. One is again, more proliferation of on-off ramps, reliable on-off ramps. And Kene said that when you have more exits and entrances, you feel more comfortable staying somewhere because you're not trapped, right? And 5 years ago, we didn't have great on-off ramps. Today, we have great on-off ramps. Do we have amazing on-off ramps everywhere? No. Why? That's because the banks are still not here and other financial institutions are still not here. When that reaches more proliferation, great. Second thing is interoperability. I talked about this. With no interoperability, we're setting ourselves to fail. Because we will all be fighting, I don't know, Sony, Betamax, whatever, VHS, whatever analogy you want to take. Eventually it ends with interoperability, right? So let's push towards that. And I think there's 2 other events I think will happen that are super interesting. One is on-chain FX. And we haven't talked about FX at all here, but Julia mentioned this, that sometimes FX actually costs more, or sometimes is costly when you're doing the stablecoin sandwich kind of thing of fiat, stablecoin, fiat. I think we'll see more other currencies being tokenized, right? And I think we'll see on-chain FX, a smart contract that I'm sending $1 behind the scenes, it gets translated into a Brazilian real, lands in Brazilian real. It all happens with a smart contract. I'm really looking forward for that to catch up. There's a few startups doing that. I think that's a lot of the future that we're seeing, and banks will obviously play a huge role in this as well, and PSPs, because FX is a major revenue driver. And the last thing, I'm trying to talk really fast because I know there's a lot of questions and mindful of time. Last thing is identity. And identity is a serious issue. This industry has been trying to solve identity for 10 years. I think we need to understand that identity as a whole, zoom out, will be solved by countries. What we can solve actually is wallet identity and other, better compliance. And, we call this at Fireblocks like trust perimeter or wallet verification, where we allow people to know who they're sending money to. That the identity piece is still missing, because that is why fiat, the normal world, works. The banks are in some sort of this closed garden where they can, send one another the information needed about a business or a user that performs a transaction. We still don't have that quite much, right? So we need to double down into that as well. And that, I think, is part of the future. And I'll pause here.
Well, I can be quick because you made all my points for me, Goldie, so I appreciate that. No, I agree. You get the connectivity between this emerging landscape and the traditional one, and it unlocks kind of the wildfire mass adoption. But yes, non-US dollar stablecoins, I think, are going to be a big theme over the next couple of years. For those who don't know, 99% of stablecoins are denominated in US dollars. We saw a rise in 2021. That dipped back down when the market crashed, and now we're actually seeing some significant ramp up of non-US dollar stablecoins. So I think that over the next 2 years is a pretty interesting space to keep an eye on. But yes, bank and wider financial system connectivity, as well as identity, all big unlocks.
And Kene, Goldie also talked about FX, right? So you've been talking like, hey, we've been talking to banks, how they should incorporate this in their strategy. How do they go about that, right? I mean, Goldie already mentioned like it's a big revenue driver now, and how does that work in the future?
I mean, FX is a great revenue line, right? If you're a bank, you love some tasty FX.
Exactly, yeah.
I don't think that goes on chain right away, but it may eventually. And in the interim, there's probably some opportunities to be a first mover in that space. And I always think back, if we're doing analog comparisons, like Goldie said, Netflix offered to sell themselves to Blockbuster for $50 million. Blockbuster turned them down. And, I bet they wish they hadn't. And so I think that a lot of large financial institutions, now that we've got regulatory clarity coming, understand that innovator's dilemma. And some are more on the front foot than others, and could be winners in that space as well.
I have to say, Kene, I loved your analogy, so I'm going to throw another one in there, which I heard, which I thought was really good, is I can't remember who initially came up with this, but someone compared the evolution of stable coins with the evolution of Skype and like video internet calls, and how initially when video, like voice internet calls first started, it was very much to call people that were in different countries because doing a traditional phone call was too expensive. And that's where I feel like we're at with stable coins today. Like most of the people that are using them to send money into emerging markets because it's kind of expensive, it's inefficient, they want their money straight away. But over time, what we saw with like telephone calls is that they were replaced by internet calls because it just became like an ubiquitous way of communicating, and everyone in the world was using them. And I think we'll probably trend in a similar direction with stable coins, where adoption is being driven in emerging markets where there are these points of friction. But eventually, I could be paying Goldie or Kene in stable coin, even if we're, in the same city. So that's really where I see the world going. It'll take a few years to get there, but yeah, I think that's where we'll eventually be, hopefully.
Cool. So trying to merge into the Q&A part, and that's also because we were talking about the future. We had this one question, like how do we, Goldie already mentioned like stablecoins, it's overhyped, it's like one of the buzzwords. Then the question was, how does that tie into the other buzzword of last year, like AI? Like how do you see that, being integrated together, which is some talks about, using AI agent in the scene. Do you think it's a topic, or is it like any?
I usually try not to mix two hypes in one sentence because I think that causes people to vomit. But I will say, sorry for being blunt, but I will say, look, stablecoins honestly are just the best payment method for autonomous agents to pay online. If you are setting up something that uses AI and you want that piece of software that's being run by an AI to pay or get paid, then obviously a stable coin that you can program, as Henry said in the beginning, it's programmable money. The fact that you can put code into it and it will only send money according to different rules, or even just the speed of settlement and finality in understanding that you have received a payment or you have sent a payment, makes stable coins perfect for AI. And again, I apologize for everyone who had to use a barfing bag. But AI and stablecoins are actually a good match.
Yeah, I compare the AI agents with the machines and IoT devices the IoT payments we worked on 7-8 years ago. Yeah, so there's not much difference conceptually from between the AI agent and a sensor that provides information about temperature or humidity. So it's and this sensor also can only provide information, can only work and make economically or be profitable when it receives instant irreversible payments. Yeah, if you are a sensor, you cannot wait 2 weeks until the payment of 1 cent comes in, right? So you can only work with instant and irreversible payments. Same as with the AI agents.
Perfect. And then maybe one question still. Somebody also asked, and I think it's also an interesting one, like moving back to regulation. So we see this whole decentralized infrastructure now, and if we are moving in that direction, how do people have a hard time getting their heads around how do you then regulate that, right? Especially in cross-border cases.
Maybe I can refer to someone from the German regulator BaFin, who was on a conference 2 years ago. And so she started talking about decentralized finance. And she said, I've never seen any decentralized application. Because at the end of the day, there are governing tokens or governance tokens, or there is a foundation somewhere. So there is always an ownership at the end. So she claimed there is no decentralized finance. Yeah, so it's everything that claims to be decentralized at the end is somewhere not decentralized and falls under the regulation as we know it today.
Cool. I think we only have a few minutes left. So I think we need to move to a close because we also have a closing poll still. So I think that concludes today's session. First of all, I want to thank you guys. Thank Julia, Goldie, Kenny, and Henry for your contributions today. And then a question for the audience. We want to close with a quick poll for you guys. So you can indicate your preference for a next webinar related to digital assets. So I will pop that up right now. It should be live now. So it's the first one being on fraud prevention, the other more looking to cross-border payments, one are more the regulation, MiCA side of things, one looking into B2B payments, and then one on business models, and then also one on AI, actually. So Goldie, we have to invite you back again and bring some barfing bags. All right, looks like right now people are really interested into either cross-border payments or stablecoins more in relation to banks. But we will keep you guys in the loop. So I guess that's it for today. Thanks, everybody, and see you next time.
Thank you, everyone.